Your bank is not a vault. It's a casino where they gamble with your life savings while you sleep. Most people think their money is just sitting there in a little box with their name on it. But the reality is much darker. Wake up and smell the inflation. Because the banking system is designed to keep you broke while they build skyscrapers with your interest. Fact 1. Banks don't actually have your money because they lend out 90% of what you deposit immediately. This is called fractional reserve banking, and it means if everyone went to the ATM at once, the system would collapse in minutes. Imagine trying to withdraw your $1,000 and the bank says, "Sorry, we gave it to your neighbor for his truck loan." To bypass this risk, never keep more than you need for 3 months in a single bank. Your savings account is actually a losing investment because the interest rate is lower than the rate of inflation. While the bank gives you 0.01%, prices for milk and gas go up by 5%, meaning you're literally getting poorer by holding cash. It's like trying to fill a bucket with a massive hole in the bottom. Move your long-term cash into high-yield accounts or assets that outpace inflation. Banks make billions from NSF and overdraft fees, which are basically poor taxes for people who are already struggling. They will often reorder your transactions to process the largest one first, just to trigger multiple smaller fees. If you buy a coffee, a sandwich, and then pay rent, they'll process rent first to make sure the coffee and sandwich both hit you with a $35 fee. Always disable overdraft protection to stop this predatory behavior. The safe deposit box isn't actually that safe because it's not FDIC insured. If the bank burns down or gets robbed, the government doesn't owe you a dime for the gold or cash inside that box. People put family heirlooms there thinking they are invincible, but they are legally uninsured. Buy a high-quality fireproof floor safe for your home instead. Banks use teaser rates on mortgages to trap you into debt you can't afford long-term. They show you a low monthly payment for the first 2 years, then the rate resets and your payment doubles, forcing you into foreclosure. It's the classic bait and switch, but with your family home. Always look at the APR, not just the starting rate. By the way, if you're tired of being a pawn in their game, smash that like button and subscribe. We're just scratching the surface. Banks don't want you to pay off your mortgage early because they lose thousands in interest. If you pay an extra $100 a month, you could shave 5 years off your loan. But they make it difficult to apply to principal on their websites. You usually have to call them and demand it. Does anyone else feel like the bank makes it intentionally confusing to pay them back faster? Let me know in the comments. Free checking is never actually free. You are paying with your data and through hidden service fees. They track every purchase you make and sell that consumer profile to marketing firms. You aren't the customer, you're the data set. Use a local credit union instead. They are non-profits and generally treat you like a human. Banks can freeze your account for any reason without warning, leaving you with zero access to your own money for weeks. If their algorithm flags a perfectly legal transaction as suspicious, you are guilty until proven innocent. This happened to a friend during his honeymoon. No cash, no cards, just a system error. Always keep a backup bank account at a completely different institution. The personal banker at the branch is actually a salesperson with a quota, not a financial advisor. Their job is to sell you high-fee insurance and credit products you don't need, just like a car salesman. Never take investment advice from someone sitting behind a desk at a retail bank branch. Wire transfer fees are a total scam because it costs the bank almost nothing to send a digital signal. They charge you $30 to $50 for a process that takes less than a cent of electricity. It's pure profit taken from people moving their own money. Use peer-to-peer apps or blockchain for large moves if possible. Banks use psychological architecture in branches, like high ceilings and marble, to make you feel small and obedient. It's designed to make you feel like they are too big to fail, so you don't question their authority or fees. Remember, it's just a building. Your money is what gives them power. Most banks still use outdated COBOL programming from the 1970s, making them incredibly vulnerable to glitches. Your entire balance is basically a line of code in an ancient system that could blink out. This is why scheduled maintenance happens so often. Always keep physical or digital PDF copies of your monthly statements. Banks can legally set off your debt, meaning if you owe money on a credit card, they can take it directly from your checking account without permission. You wake up to pay rent, and your balance is zero, because the bank took their cut first. Never keep your savings and your debt in the same bank. Have you ever had money disappear from an account for a fee you didn't authorize? Tell your story in the comments. The FDIC only insures up to $250,000, so if you have more than that in one bank, the rest is at risk if they fail. During a crisis, the government might not be able to bail everyone out at once. If you're lucky enough to have that much, split it across multiple banks. Banks make money off your float, which is the time between when you deposit a check and when they give you the funds. They are earning interest on that money in the overnight market while you're waiting for the check to clear. Demand immediate availability for your funds if you've been a customer for a long time. ATMs in convenience locations are designed to harvest fees from the unorganized. You pay $4 to the ATM owner and $3 to your bank just to get $20 of your own money. That's a 35% stupidity tax. Plan ahead and only use your bank's branded ATMs. Banks are increasingly closing physical branches to save money, leaving elderly and low-income people stranded. They want everyone on the app because an app doesn't ask for a salary or health insurance. If your local branch closed, did it actually make your life easier or just more annoying? I want to see the consensus in the comments. Your debit card offers almost no protection compared to a credit card. If a hacker steals your debit info, your rent money is gone instantly and might take 60 days to return. Use a credit card for all purchases and pay it off daily to keep the bank's money at risk, not yours. Banks often sell your mortgage to other companies without your consent. You start with a bank you like, and suddenly you're dealing with a shady servicer in another state with terrible customer service. You have no say in who owns your debt. The credit score was invented by banks in 1989 to standardize how they profit from you. Before that, it was based on character and local reputation. Now you're just a number in a giant machine. Don't obsess over the score. Obsess over your cash flow. Banks contribute heavily to political campaigns to ensure regulations always favor the house and not the consumer. The laws are written by bankers, for bankers. This is why overdraft laws are so hard to change. Do you think banks should be allowed to lobby politicians? This usually gets people heated in the comments. Let's hear it. Inactivity fees are a way for banks to slowly steal money from accounts you've forgotten about. If you don't touch an account for a year, they start nibbling away at the balance until it's gone. Close any account you aren't actively using. The interest on a 30-year mortgage is front-loaded, meaning for the first 10 years, you're almost exclusively paying interest and zero principal. You don't actually own any of your house for the first decade. Make one extra payment a year to break this cycle. Small business banks often require personal guarantees, meaning if your business fails, they can take your personal house and car. They want the upside of your business with none of the risk. Read the fine print before signing any business loan. Currency is no longer backed by gold. It's backed by faith. And banks are the high priests of that faith. They create money out of thin air every time they issue a loan. It's a digital illusion. Understanding this is the first step to true financial freedom. Banks use complex jargon to make you feel like you aren't smart enough to manage your own money. Terms like amortization and escrow are used to gatekeep financial power. Always ask them to explain it like I'm 5. Check fraud is making a massive comeback, and banks are slow to stop it. If you mail a check, thieves can wash it and change the amount from $20 to $2,000. Stop using paper checks entirely. They are a 19th century security nightmare. Direct deposit is a tool for the bank to ensure they get first dibs on your paycheck. They love knowing exactly when your money arrives so they can pull out their fees and loan payments automatically. Banks are betting that you are too lazy to switch to a competitor. They know switching costs, changing all your auto pays, are a headache, so they keep your interest rates low and fees high. Prove them wrong. Switch if they don't value you. The ultimate goal of the banking system is to keep you in a subscription to life, where you always owe someone interest. To win, you have to stop thinking like a borrower and start thinking like an owner. Banks are essentially the plumbing of our world, necessary but often full of waste. If you don't watch the pipes, you're the one who ends up getting soaked. Don't just trust the suit and the marble lobby. Trust your own math. If this opened your eyes, you need to watch our other video on the secrets of the credit card industry. Thanks for staying until the end. Now go move your money to somewhere that actually respects it. See you in the next one.